Hey
Uh,
guys, how's it going? It's your favorite realtor, ESG, otherwise known as the Saint-Gerard. My special guest today is Angelo Gionis. Angelo, welcome on the show.
well, it's great to be here again, as always, Evans.
All right, Angelo is one of the top mortgage people, professionals. It's my go-to person. And anything that changes in mortgage, I got to talk to Angelo and find out what the deal is so he can let our clients know what's new. So, with that being said, Angelo, I know there's been a couple of changes. Could you tell the audience what's going on in mortgages right
Oh,
now?
absolutely. First and foremost, I want to wish everyone a happy new year. Hope everyone's healthy and safe, all that good stuff. But with the new year comes new changes, right? So, one of the things we've seen in the mortgage industry, especially over the past 2 weeks, is rates have increased dramatically. And the Fed,
By how much? How much?
it's safe to say by over a half a point. So what that equates to in dollars and cent wise, if you were looking at a home last week at 500,000 in New York, you're paying almost $150 more for that same house.
Okay, say that one more time, just for the people in the back who didn't hear that.
Sure, sure. So if you were looking at a house in December and you agreed to the price and you locked in, if you find that same house today at a $500,000 loan amount, your payment increased about $150 per month.
Okay, and from what I heard, the Fed has made an announcement that they're looking to possibly raise the rate up at least 3 or 4 more times this year.
Yeah, they're not going to have the accommodating easing anymore. So what they think is they want to go back to a normal market cycle. So what that means is the Fed is looking to raise the prime rate and the rates all around about 3 to 4 times this year. So they're actually changing their position. So with that, the market took heed to that, and in fact, what we've seen is the rates increase steadily over the past 2 weeks. And we feel that it's an increasing rate environment. So if you like a home today and you're in negotiations, I think it would be prudent to make that move on that today, because that same house is going to get more expensive if the rates go higher, which we feel will happen this year.
All right, so I stress this to the buyers that I work with. If you like something, move quickly. There's no sitting on the fence and thinking about it. We'll wait because basically we don't have a crystal ball. We don't know where things are going to go later on in the year or the next couple of years. If you can afford to buy a house and you're financially, number one, you have to be financially ready and you have to be
Yep.
mentally ready. And the mental is the thing that draws a lot of people back. You have to be mentally ready basically to do this. So you have to sit down with the right people, build your team, and with that, follow their advice that they give you. Because professionals like myself and Angelo, we're doing this on a regular basis. And you might as well utilize our expertise basically for your benefit because we want to help you get well, the end result is we want to get you into a new home, and that's what you want. So we want to do that for you as well. So in order to do that, you have to listen to the professionals that you're working with.
Yeah, no, that's Evans. That's so true. And one of the things we've been doing is we've been reaching out to all our clients that we had pre-approved last year, and we're trying to update those approvals, because what's happened over the last 30 days, if you were approved for a $500,000 loan amount, that just may have got reduced to 470. So there is a chance, if you were approved for a home last year, with the rise in interest rates, depending how close your debt to income ratio was on the house you were buying, that we need to revisit it and take stock with it. So it's super important to be engaged. I am ultra excited about this year and what the mortgage industry has and the real estate industry has. I think homes are still going to sell. People still want to buy. I don't really see the market declining in regards to values right now. I think it's a very even pace, more normalized market, but there's still so many more buyers to sellers in most
Exactly.
markets. Some markets may be a little different, but for most markets, and the markets we serve right now, it's still been fantastic. And we're here to help and educate. So if you have a question, let us know. The best part about this year, there's still grants available. There's still down payment assistant money available. There's still construction money available. So we still have a lot of tools that we could still give the home buyers so they could get in their homes and they could fix them and they could really take advantage of that home ownership. And that's really the most important thing. Like you said, Evans, nothing excites me more than one of my clients purchase that home and calls me in the home and says, hey, we did it. It's amazing.
How you feel is basically the same way I feel when I have the keys at closing. I can give them to the new homeowner and they're happy they're moving into their home. I love that feeling. With that being said, we already hit this over the head. I'm going to keep hitting it over the head a lot, basically. If you want to buy, now's the time to do it. If you can financially, you're mentally there, do it now. Do not wait. You don't want to wait and price yourself out of the market. Market, basically, you can't really time the market. You have to be in the market to purchase something now. And if you're looking to sell, that's another thing. Basically, if you're looking to sell and buy something, now's the time to do it.
Yeah, no, 100% on that. And just a quick nugget, if you purchased a home 2 years ago, chances are you have over $75,000 worth of equity in your home in New York, in our market. 75,000 equity.
Break it down. What does that mean?
So what that means is, and this is an interesting statistic, it's just something that we all need to educate ourselves on. If you own a home is the quickest way to build wealth in your life. So by owning that home 2 years ago, you just increased your net worth over $75,000.
I don't have the stats with me right now, but I believe I read somewhere from last year, it was 32 or 42, I don't remember exact numbers, percentage of people who purchased a home, basically exactly what you just said, their net worth basically went up. And with that being said, that is the key to building wealth, is to buy real estate, hold on to it, and see how much it appreciates, and then sell it when you can, buy something else, or leave it for your kids. But you have to have a plan. You have to sit down with some professionals to walk you through how to maneuver through this stuff. And if you can't buy here in New York, there are other states that you can buy also. So,
oh yeah, 100%. And
yeah.
One thing on that, the investment market is still red hot. Areas specific, but like we said, once you buy your primary home, one of the things we love to see is our clients purchasing investment properties where they're getting that rental income, where they're building their wealth, where they're really showing appreciation in the asset and a residual income every month. So not only do we do primary homes, right now is still an exciting market if you're looking at investment properties to grow your financial net worth as well.
Well, I'm glad you brought that up, because we are planning to do a couple of seminars together. We're going to be doing them through Zoom. We're going to be doing first-time buyer seminars. We're going to be doing seminars regarding whether you should refinance or sell, because there are options out there. We're going to do probate seminars in real estate, divorce and real estate. We're going to also be doing investment seminars as well. So be on the lookout basically for all these things coming out in the next couple of months. And that's pretty much all I have for right now. I want to wish everybody happy holidays and happy New Year. And if you have any questions regarding anything, feel free to reach out to either one of us. Feel free to follow, like, and subscribe to this channel. And that's pretty much it. Angelo, you have anything else you want to?
No, the only thing I could say is this. Yeah, rates may be rising, but we have the most robust amount of different products and programs available for any type of investor out there. So even though the rates are still moving up, the products and programs we have to match any type of borrower out there. And I'd love the opportunity to conversate about that with anybody that would be interested.
I just want to say one thing. The rates are still low. They're lowest that they have been. They are going up, as you mentioned before, but they are still low compared to the last couple of years. But like I said, you don't want to wait and price yourself out. So if you're gonna buy, do it now. If you're gonna downsize or upgrade or whatever the situation is, do it now. And I have nothing else to say other than that. Just stay tuned for the next episodes.
Let's do it. Real estate market's one of the hottest markets ever and always will be.